Welcome back to the channel, my fellow traders and investors. So NIO stock has been doing really well for us. A couple weeks back, I told you guys to buy into that breakout above $35. A lot of you guys caught that and a lot of you guys made a lot of money. Then just last week on Friday, the stock ended up dropping about 3 to 4% and there was a ton of panic in the markets. But I clearly told you guys that the stock was still bullish as I outlined in my video, and boom, the stock ended up exploding all the way up to a high of $41 a share, again making you guys a bunch of money. Now NIO stock today is pulling back yet again a little bit, so today I'm going to be breaking down its updated technical analysis, price target, and my personal strategy of how I plan to be trading and investing into the stock at this point. So all I ask in return is that you subscribe so that this video can be pushed out to more traders that need a better understanding of how the stock is playing out and where it could be going. And if you want to learn technical analysis for yourself and a ton of advanced trading strategies, be sure to go get my book, A Technical Trader's Handbook, on Amazon, which is the #1 hot release in public finance in the world. So be sure to go get it, and let's jump into the video. Alright, so jumping to the technicals of NIO on this 1 month hourly chart, we can see a few things right off the bat. So firstly, obviously our initial call out was right into this breakout over here at 35. Then last week we pulled back and I told you guys how we're forming higher highs and higher lows, and we were essentially at this bottom support line, but we were also turning a previous level of resistance at $39 way in the past into support, as well as overall there were a lot of other bullish factors as well. And as we can see, the stock continued and exploded higher all the way up to $42 a share, which was my exact price target for you guys. So congrats to those of you who caught the move. Now as we can see, if I actually go back to the daily chart for just a second, we can see that we're finding resistance at that $41, $42 level, which was our previous higher low. You can see we were forming lower lows and lower highs. It was our previous lower high where we found resistance right over here. So again, it makes sense that we're finding somewhat of resistance as well. Now the daily candles are also looking somewhat of a little bearish as well. You can see how this candle right over here, actually yesterday, we can see how buyers tried to push it up as represented by the long top wick, but sellers were like nope, and they shorted it all the way back down, and there was a ton of profit taking as well, which kind of makes sense considering we're at such a critical resistance level. Now what is still continued to be bullish is the fact that we're turning the 9 EMA, which is this blue line, into support, right? You can see we're forming higher highs and higher lows, but every time we're pulling back, we're turning the 9 EMA, which is the blue line, into support and pushing back higher. Like right over here, we were turning into resistance, now we're turning into support, and this indicates that buyers are willing to pay a premium compared to NIO's short-term average price, indicating that there's still buyer strength. And this is expected. As we know, NIO's earnings are just in a couple of weeks, and so there's going to be a lot of pent-up demand to buy into the stock, especially at these cheap levels. And we can even see that with the pretty solid, healthy buying volume that we've been seeing. You can see buying volume really died down, but now we're seeing spikes again, as I believe retail investors, institutions are buying in. Now overall, we are a little overbought on the RSI and the MACD, right? The MACD has went back into positive territory. The RSI has approached the 80 level. So it kind of makes sense that at this point we'll find resistance. And honestly, at this point, I think NIO will probably see some sort of consolidation. I think the uptrend has not really died down, but we're going to see, consolidation, a little bit of sideways trading now at this point, just because, their earnings are in a couple of weeks. There's going to be a little bit of uncertainty here and there. And I think until we get some major catalysts to, really cause a big squeeze of the shorts and to see buyers really fuel back in, the stock will probably continue trading sideways, maybe in this, I believe, probably $39 to $42 range, just in kind of like the short term. Now, with that being said, there's still a lot of ways to continue making money in those ranges, but overall, the trend is extremely bullish in the long term. The long-term trend is really bullish because of this golden cross. As we can see way back over here, right? This yellow line crossed below the green line. Now the yellow line is the 50 SMA and the green line is the 200 SMA. And so essentially this is a death cross, one that happened on this 4-hour chart. You can see how NIO just went boom, 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 lower and lower, right? But now, as we can see just recently, just in the past day or two, we can see how the 50 SMA has yet again crossed above the 200 SMA, indicating that buyers are in control again and that the trend has shifted in favor of the bulls, right? The overall longer term trend, essentially these crosses indicate longer term trend momentum shifts. And so the fact that we've now gotten this in the last couple of days indicates to me that even though in the short term we might see a little of consolidation, the longer term trend has really shifted, and that most likely again we probably won't return back to these lows or see lower lows, right? So that from that aspect is looking really healthy for the stock as well. So now that you've gotten a rough understanding of the technicals, let's talk about my personal strategy and where I could see NIO stock going and how I plan to be trading this. Alright, so as I've been telling you guys for the last few videos, my strategy has always been to buy into the breakouts, right? We bought the breakout at 35. We bought the move right over here above this $40 resistance level before we pushed up to about 42.5 when we bounced from our our higher low, right? We bounced from our higher low, we broke above this resistance here at about $40, and boom, bought into that, and we continued to explode even higher. So now at this point, what I'll be waiting for if I personally wanted to add more is our next breakout above this resistance level here at $42, because again, this was our previous lower high, and once we break above it, you can bet that a lot of short sellers have their stop losses placed over here. A lot of people shorted in this area pretty heavily, so they're going to be using that as a reference point. So we break above this level, I'd be buying into this with a price target all the way up here at $47 a share, or a potential price increase of about, we're looking at about a solid 10 to 11% gain, which is not bad at all. In fact, if I actually place in our Fibonacci retracement from our swing high down to our swing low, we can see that that $47 level also happens to be our 38% Fibonacci retracement level. But in the way, we also do have our 50 Fibonacci level here at about about $44. So I think we definitely do find some resistance here at $44 as well, just because that 50 Fibonacci is like our midpoint. We have our 0, we have our 100, with the 50 being that midpoint or that make or break level. So that's my strategy if we get that breakout above $42. And again, we're forming higher highs and higher lows, so this trend is still somewhat bullish. But now let's talk about what happens if NIO stock ends up dropping, because guess what? It's totally possible, right? Anything can happen, anything can flip sideways, they can report negative earnings, negative news can come out, all of that. So at this point, we're forming higher highs and higher lows. Now the crucial level of support, if we do end up dropping lower, will be this $39 level. The reason being is that $39 was this previous higher low, right? We're forming higher lows, higher lows, higher lows. And so the moment we break below a previous higher low, technically at that point we start forming lower lows. That's when we shift into a downtrend. So that's why it's going to be important for us to retain above this $39 level in order for us to continue seeing consolidation or move higher. And if we break below 39, then the next level of support will most likely be down here at about 36.50, where we had a previous level of support in this area over here, previous level of resistance, and this was kind of like the level we broke out above when we kind of sparked this new rally. So with that being said, guys, that's the video. If you enjoyed this in-depth technical breakdown, be sure to like and subscribe, and be sure to go get my book, A Technical Trader's Handbook, on Amazon if you want to learn these advanced trading strategies and how I've been able to help you guys catch over 100% gains simply based off the technicals. With that being said, I'll see you guys in the next one.